Hi, Ken. Thank you so much for joining me today. I'd love to first dive into a bit of your background and how you came to starting Finceptor.
Yeah, Maddy, thanks for having me. I'm John, co-founder and CEO of Finceptor. I'm originally an electrics and electronics engineer, and then I, started out my career in AI in finance, and then got pivoted to, crypto. It's been, I think, 3.5 or 4 years. Been there. I did a couple, things in crypto, and ranging from, research to trading to, building platforms. And now I'm building Finceptor. And Finceptor is a token launch, treasury building, and liquidity bootstrapping platform, allowing projects to raise capital and allowing retail investors to safely access some opportunities in Web3, ranging from token launches, liquid OTC deals, and more.
Perfect. And when did you start Finceptor?
I think it's been 2 years.
So what initially inspired you to take the move and start Finceptor?
It's a good question. So I'm living in Turkey. I'm a Turkish guy. And in Turkey, we've got this hyperinflation. And, we've got triple-digit inflation rates and over years. And it's just so hard for everyday people to hedge against the inflation. So it's just barely impossible. And our currency is devaluing over time. And there's so little less to do with that. And I've been reading an article about this, retail investments, private investments, and just realize that, overall private market returns are just outperforming the public market returns. So meaning that, but in the private markets, there is no access in retail. There is, everyday people just like you and me, for example, we're not allowed to access there. So what I thought is just, building a platform for allowing everyday people, retail investors to, provide access to private markets, the ones that you cannot join individually. Because there is this always, capital barriers, information barriers, and you're just out of the game. But, with that vision and with Finceptor, we're kind of, building a platform where retail investors can kind of combine their purchasing power to, invest things which are not previously possible.
Yeah, I think crypto definitely opens up a lot of doors for countries with, I guess, less optimal economies, so high inflation rates. Because a lot of us do live in developing or fully developed countries. And so you can often forget how critical blockchain infrastructure can be. What use cases have you found most interesting, or have you found that your retail investors are most interested in within the blockchain space? Is it the token launches, or where do you find that they have the most interest?
Yeah, I think retail activity is most of the time is all about some form of speculation. They are just cool for taking risks, but they're expecting high returns, right? So that was the kind of the segment that's we have. So given that, I think they're most interested in token launches because these are the places where people made 100x's in the previous years. And I think this is the kind of the retail, behavior. They just want to buy into things, and they just, they want to speculate. We're not asking how valuable is this because they don't care. What they care is just, some returns, right? So this is just, by the way, one segment. There are some other segments as well, but I think this is the most dominant one in crypto. So the cycle we've seen is that the higher the inflation, it's harder to hedge against, and the more crypto is involved. So that's the kind of the equation that we're kind of following. And with that, I think, this token launches, IDOs, ICOs are the top ones that retail guys are following. But on top, we've now seeing some other segment, which I'm not so familiar with actually. And the segment is more following more sustainable returns and not just like a one of tens of thousands of X's, but more, more sustainable and lower yields. And that's where I think our bond product comes in. So in our bond product, basically we allow, community members, everyday people to access discounted but, vested spot markets, meaning that normally there are like hundreds of thousands of tokens out there. But now, in Finceptor, what we do is we allow we allow retail investors to purchase these tokens at a discount in a real time in exchange for a little bit of lockup. So that is a kind of fundraising tool for projects utilizing, retail community. So that way they're, now accessing kind of like never seen discounts on the spot markets, and risks are a bit lower. Returns are, a bit lower as well, but it's more sustainable for both projects and for both, retails. The cycle I'm now observing is that we're now like shifting towards a more sustainable, financial tools and investments. But I think, the token launches are the top now in a way, but I think we're now in the process of, shifting.
Interesting. Why do you think we're going to more sustainable finance? What has changed?
Because I think we're getting educated, because we lost a lot of money and, we learn from the mistakes. No one buys at hundreds of X's right now as even retail. We somehow got educated a bit. So that's, I think, the number one. And then number two is, I think the financial literacy is getting into the game, and we're getting more educated on this front as well. So, for example, we're also, advocating more sustainable investments and sustainable yields for sure. And then, and I think the overall industry is also kind of pushing that as well. But I think it's more, we're just getting, mature over time. I think that's the kind of the end game that we're heading. So when you look at the ICO boom back into 20, I think 17, right? And the thing was 100% unregulated. Everyone is just minting tokens and pushing the community, getting, into the hands of people. And then all 100% speculation and there's some like hundreds and thousands of X's. And that was like a crazy. But I think now with more regulations come in, plus some corporate money flowing into crypto, I think we're heading towards more sustainable and more value-driven markets over time.
And so you've touched on one of the products that Finceptor has, which is the bonds. What other products do you offer at Finceptor?
Yeah, so we are now offering 3 products, one of which, and the dominant one, is our token launch arm, where we launch tokens, trying to launch the top tokens in our industry, and I think that's most money flows in. On top, we build a product called Bond, which is a more sustainable way of investing, trading, and raising funds, raising capital for projects. And on top, we recently launched our OTC trading platform for pre-launch projects, allowing retails to buy, sell, and trade their paper allocations even before the the TGE, even before the listing, even before the liquidity event. And I think also that is also something important because, what I've seen is that it is less speculative than the whole listing and the whole, spot trading market, because OTC trading is a bit advanced tool, and then you got to have a bit of, knowledge to come in. And then if you do that, I think you can just, invest and get 30, 50, sometimes more 2x and 3x returns in days. And that is making the whole thing more sustainable, bringing a lot of liquidity to illiquid assets, which is also, I think, one of the biggest aspects of Web3. So, yeah. And now we're launching another product called Finceptor Pro, which is a private way to invest in private tokens. So it's more like a private platform to access some of the largest Web3 deals, private deals on the market without getting public to know them. Because founders and investors sometimes don't want to disclose the investment terms, the financials, and there's a lot of metrics. But in the launchpad and the token launch, where everything is public, right? So I think that's where we bring Finceptor into game, and it's just another tool giving more access to more retail. So it's just the same vision, but different products.
Yeah.
And serving the same mission.
That's great to hear. And you've probably seen a lot of token launches in your time. What have you found are like the critical pieces for, I guess, a successful token launch? Because I often come across founders who either launch like a token like a few years ago, or they're planning on launching one, and they just don't have experience launching tokens. Do you have any advice to those founders?
Yeah, I mean, for me, token launches are kind of things once in a lifetime. And maybe more, maybe you can launch twice. That could be something, right? But most of the time, it's just once in a lifetime. And since it's just once in a lifetime, you don't know how to do that, right? But you just got a one shot to do that. So it's the kind of the dilemma. But I think the biggest question that you should ask is, why are you launching a token? Because when you look at that, like pretty much 99% of the tokens listed on CoinMarketCap as are going to get zero at some point, because there is no utility, there is no a culture vibe, investment value, I don't know, some instinct value that we can care. Most of the time, the thing is that token launches are so incentivized because there are a lot of money flowing into this market, and founders are kind of misaligned because they're raising capital, especially if you're at pre-seed and seed stages, so hard. With tokens, it's a bit easier because everyone wants to speculate, and then you raise some funds, and now you gotta launch a token because there's some money invested in this. And then basically, since you kind of found a way to attract capital into your project, now it's your turn to find some utility. But it's just made up, right? So it's not real. It's not out. It's just made up. So that is the problem. Most people just do governance tokens. For me, why it is so valuable to govern? So there are just few products out there that are so valuable to vote and govern. But people just attach brand name with token and speculate the platform's success with the token, right? So it's again speculation. So I think that's the number one question, is that why do we need a token? I think there is some good reasons why you should launch a token. The first one is security. You wanna secure the network by distributing tokens, a way to decentralize your network. So that's number one. I think that's the most established and reasonable way to do that. But on top, I think tokens are the strongest devices and tools to bootstrap networks. imagine Uber, right? Uber is a driver network. But the thing is that as a user, if there is no driver, I cannot use the platform. But if there is no user, why would I drive as a driver? So there is no reason. So there should be some level of network with nodes, right? So that I can come join into platform, and then I can be a user or I can be a driver. So, but bootstrapping that kind of networks are so chicken and egg problem. So it's just so hard. But I think tokens are powerful tools for aligning both players and parties' incentives into a network so that we can bootstrap that network effectively and much more easily. But with that, I think it is becoming a more royalty and more reward token, right? So that is a problem in one side, because you don't want everyone to sell off your token. You want to have more stabilized price action eventually. But with that, you utilize the token to bootstrap the network, and then now it's your turn to find some valuable ways to attach the token that can bring more network players and more purchasing power, buying power into network. So I think these are the top reasons why anyone should launch a token. And one last thing is that, as humans, we're kind of thinking short term, right? A bit sometimes, but you're not thinking what's going to happen if you bankrupt. You're not thinking, what if your people, your users, your community loses money? What if, some bad shit happens? You don't think that, right? So, but I think everyone should think that. How to manage liquidity, how to bring, traders, how to bring users to your token. It's just a big overhead. So there's some good side and there's some bad sides, but I think we're not well educated. We're not well prepared for, as an industry to understand the, ins and outs. So I think that's my take on that.
I'm on the same page as you. And I do often think that it's like a short-term versus long-term thinking. And the nature of startups is you have to essentially pivot to find product market fit. And so a token that you thought would work at the start won't necessarily work once the token is launched and then you've already pivoted. And so I think it's as a founder, it's a really difficult thing to navigate, because it's like it's almost like your company goes public at like a startup stage, whereas in traditional markets, that doesn't happen until you're like a massive company. Have you come across similar things from like founders in particular, where there's been this, I guess, stress around having public tokens and things?
Yeah, I think it's, until you launching a token is number one priority and number one time allocation, because there are hundreds of thousands of little things that you should bring together before you launch a token. So what is the utility? How to navigate the legal, the complexities, and why even I'm launching a token. So and what's the economic model? What's the token economics? What's the allocation that I should reserve? The whole what we know as tokenomics table, right? So there are like hundreds of little things that you gotta take into account. And then to properly launch a token, you gotta do some token related marketing. You gotta talk to a lot of exchanges, maybe launch pads, maybe your token launch. I mean, it's just so time consuming thing to do that. So that's number one. And after you launch, I think there are like two ways. One is you're in the good end and there's a good positive, cycle. meaning that you manage your liquidity, your market making is, aligned, community is happy to trade, and then so that is a good path. But if you are not past the threshold to get there, then you're in that cycle, that spiral. What's happening is that you're not attracting traders, meaning that the liquidity is low. Since the liquidity is low, there is no real user flow into the market. Since there is no user flow into the market, tokens get depreciated and your investors are losing money. Community is unhappy, they're sad, and then the things getting bad exponentially. So, and if you're at that front, on that front of the business, it's just so hard to get back. It's just so hard to stand up and pass through the other cycle. So, yeah, on top, I think when you launch a token and then now there's probably millions of dollars worth of capital is staying, out there to find some profits, right? And then you are if you're launching a token, it is just so natural to think about the price and then how you can pump up the price. I mean, it's just the investment. So some founders are a bit shy to talk about that, but it is a kind of your business to pump up the price because you're doing a token business. So if you're not carrying the token price, why did you sell these tokens to investors? And why made you buy them, right? So that's the kind of the thing. So it's like you're like a 10 people, 5 developers, 1 marketing, 1 sales, 2 founders, and 1 CTO and 1 legal. And then you're just like, there is a whole millions of dollars of public market of your token. And then you don't know what to do next. So it's just, oh my God. And there are a lot of money out there. So I don't know what to do. So it's just so inconvenient. And I think that the question that we should ask is when to launch a token, right? Because I think it's all about timing as well. You got to do it timely, probably after you found the product market fit. You can utilize some, airdrop or points, some token-based systems to bootstrap the network, but you're not launching. You're launching at the time where you actually found the product market fit. So I think I can talk about on that matter for days, but I think it's just cool for me to stop there.
At Finceptor, because I know you don't just accept any project to list on your platform, what is your evaluation criteria when you look at different projects and choosing which ones to launch?
I think we're looking so fundamental. We're some kind of investment platform. Why people join into this kind of platforms is because they want to make money. They want to get returns. They want to make profits. So the only thing that is valuable to them for your users is making money, is making profits, is making returns. So that is number one. The token launch that we are looking at should be profitable according to our experience. For sure, it's not, everyone should do their own due diligence, non-financial advice, for sure. But the thing is that we should be kind of putting our experience into the table to understand that what is best for them. So that's number one. But actually, this is not the whole thing. Because I think there are a lot of opportunities in crypto that you can make money, you can make profits, but you want to work with legit businesses that can last over years. So, and then the credibility and the branding is so important. So if the business that we are launching, if the token that we are launching, if we're thinking that this is not going to last years, then I think it's not worth playing. Because eventually, if you believe that it's going to go down to zero, why would I launch? Because even though we think that there is a short-term profit opportunity, we don't do that because I think there is nothing so bad about that. It's just not our play. And then, so these are, I think, the the whole credibility and then the business that could be sustainable over years and some profit opportunity are top two things that we're looking at. And then I think there's this whole due diligence flow where we take community, financials, team, product, marketing, security, legal, pretty much, everything into account to understand that everything is, everything seems cool. And then, we believe into this. So that's how we kind of look at deals in Finceptor.
So what actually excites you about the retail market? Because at the moment, there is a lot of noise around institutions coming into crypto. But I like your approach because you're still very much focused on retail and actually building the best products for them. Why are you so excited about that?
I think it's just so hard to be alone as retail investors. And retail investors are alone. They're individuals. They're just out there playing the game with giants. So they're just alone, right? So I think no one should be alone in this kind of Wild West financial markets. And the second thing I believe is that a phrase, string, come from unity, right? So as collective, retail investors can access the previously inaccessible things together as a community. So that's I think a powerful narrative, because just imagine that. So just imagine the following. You're like a Web2 company, like a traditional business enterprise, and then you apply discounts when there's a large order, when there's a large purchase. And why is that? Because the future looks more uncertain, because you get the big chunk on board. But as a retail, but just imagine that once you get big, you can get discounts out of the market, out of your suppliers. But as a retail, you cannot do that. But what if we combine everything into one as a collective, apply the discount and divide the discount and, fractionalize the discount into pieces of, into retail investors. So basically, normally, you as a person can buy the same thing, the same service or product at just numbers, $5. But since a discount, imagine 20% off, you're just getting at the price of $4. And it's just cool. But you just leverage the power of collective. So that's the kind of the play, the narrative we're seeing playing out. And I think we're all betting on that. And I think we need to find some ways, maybe new platforms to help them coordinate, help them not be alone, help them how to be a collective and navigate the markets. I think that is so exciting. And I believe I'm so excited about the future that looks like more collective, accessible, open, transparent, for retail investors.
And what current retail markets are you targeting at Finceptor? You're obviously very engaged in the Turkish market, but what other markets are you targeting at the moment or looking to target in future?
So actually, the current strategy is so simple. Higher the inflation, higher the crypto adoption, and higher chances of Finceptor comes in. That's how we're getting users. And for example, we're Turkish guys and Turkish founders, and I think we did a good job in the Turkey market. Our people get attached to us naturally because we're Turkish guys. And you got to understand the market dynamics, because in Turkey, it's all about sentiments. It's all about value. For example, you can allow some guy to make a lot of money, but if you're not treating him well, for example, he's not going to take your opportunity. So I think that is just the one single market dynamic that we should understand. So because we care the market dynamics and how we should treat people, we're not so being aggressive. We're just trying to understand what is the best market for us to come in, and then what's the best way to get there. And I think the whole Asia market is a big opportunity for a big retail adoption. There are billions of people out there, a lot of retail, everyday people trying to hedge. And I think There's a lot of opportunity in Asia, for example, in India. And I think I'm so excited about these new emerging markets out there.
And so what are the key priorities over the next 12 months for you and Finceptor?
Crypto markets are a bit seasonal and making the whole thing unsustainable. But I think sustainability, I'm not about, the green sustainability, right? So I'm talking about the financial and economic sustainability. And I think we need more sustainable returns and asset classes and financial tools and platforms in crypto to be more sustainable. And that's where I think we're making plans, and we're just like thinking through how we can do it. And that is a number one priority because, for example, as Launchpad platform in one hand and doing token launches, they're seasonal. And now we're looking at how we can be more sustainable through our offerings and services and products. And on top, I think the vision is so big to achieve, and then we're just taking small steps towards the vision, which is giving access to, previously inaccessible things. And I think we're looking at building more platforms, building more tech around this, retail access to, head over to our vision. And I think the last thing could be identifying, just thinking through the markets, the regions, the geographics that we can tap into around the globe.
I think sustainability is a big one. Most businesses within the crypto industry are so impacted by seasons. And it's actually quite difficult as a business owner to be able to juggle those, because the nature of crypto is that you almost have this public market really early on. And so being able to manage that, I think, especially as founders, is very difficult.
Yeah, and I don't think it's a good thing.
No.
Right? And I think it's more bad than good. So we got to do something to do that, to overcome.
How are you thinking of overcoming it at the moment? Just by launching more products, or?
I think it's just not about products and services, because the whole industry is pushing this narrative, because, I believe short-term profits are not necessarily bad things. And this is financial markets, and we're rational players. And I acknowledge that it is a thing, and it is a natural thing to do that. But if we are pushing this narrative, then what we're heading towards is just the same thing in a different color. But if you want this industry going forward, we need to have more sustainable markets, more protected investors, protected capitals, more regulation, and some borderlines, because it is more Wild West than anything right now. But I think we're going to do this eventually. I don't know how it's going to take, 5 years, 10 years, but I think that's the thing, and that's where we're heading anyway. But in the short term, what we're thinking is that crypto is just not all about financials. It's pretty much about financials, but there are a lot of things, a lot of utilities, a lot of value that we can create with non-financial things as well. I think there's this whole opportunity in there. So maybe we're looking at this kind of stuff.
And what is the best way that people can support Finceptor?
Subscribing to our channels, just, being connected and staying connected, and just seeing what we're trying to do, and then providing their feedback naturally to help us to understand, what they're thinking and how we can do it better, and then what they need and what's the main suffer point they've got, so that we can understand what is the thing with that, right? So I think this is the top way people can, help Finceptor. As a general thing, I think we're just so early. We're still in the earliest phases of the market. So, and then all we need is more feedback, and then feedback-driven action. So that's, I think, where I see the most value coming in.
I like that. I like that. Well, I think we've covered some really helpful topics, ranging from launching a token, the retail market, and your priorities. So this has been a really great conversation. Thank you so much.
Thanks, Maddy, for having me. It's been a pleasure for me as well.